What is critical illness? It's an often overlooked type of insurance compared to disability or life insurance. Before I get into that, I did want you to take a quiz. Now, the quiz is actually in my blog, which I'm going to share with you through a link at the end of this video. Please click on it and take this quiz when you have a chance. It's not a very lengthy quiz, but you'll be very surprised by the results that you find. The main questions I will go over quickly with you are: what's the risk of causing a serious injury in a car accident this year? What is the risk of experiencing a house fire this year? What's the likelihood of a healthy male age 40 dying before the age of 65? And then in every age group, age 15 and older, which of these is most likely to experience disability, male or female? And finally, what are the chances of surviving a heart attack? You'll be surprised by the results that you do find, but it is very pertinent to our topic today. So, critical illness. Most of us are familiar with life insurance, which is the most common form of insurance out there. Essentially, where if you pass away, your loved ones get a certain amount of death benefit that they can use to cover final expenses, paying off mortgage obligations, etc. You're also may be familiar with disability insurance, which is common in group benefits plan, where essentially if you suffer an injury or illness, you cannot perform the normal functions of your job, and the insurance provides a certain amount of monthly income supplement to provide for that while you're recovering from your injury or illness. Critical illness is something that is not typically provided in even the most comprehensive group benefits plans, and certainly not something that most self-employed individuals consider. But it is a very important type of coverage that you should consider having in addition to your existing life insurance and disability coverages if you have those. Critical illness is a living benefit. Basically, it provides you a benefit if you survive from one of these major illnesses, which are listed below. When you get the coverage, the insurance company has a predefined list of illnesses that are covered. Typically, these are severe enough to prevent you from not only working or performing your business, depending on what your occupation is, but it limits you in your daily activities. It is so severe, such as heart attack, stroke, cancer, blindness, etc. Now, you may think that you can draw on your savings if something happens to you, and while that's true, there is a time factor. It may take time and other resources to access those financial reserves you may have already, but you may be in a very critically ill condition that you cannot wait. Also, your family or loved ones may also be required to take time off work or to manage the additional financial burden that is afflicted them because of your condition. Something like a critical illness insurance coverage would at least provide a lump sum benefit that they can use, or yourself, to cover any incurrence of debt, medical bills, other financial obligations that have resulted from your condition. It can also be used to cover short-term bills resulting from your personal or business obligations. So critical illness, again, is not something that is provided typically through group benefits plan just because of the cost it is to the employer for providing such coverage. But it is something you should consider having even at a minimal amount. Most policies start from a minimum coverage of 20,000 and can range all the way up to 2 million. The question may be, how much coverage do you need? That is a question that can only be answered by doing an analysis. There is a tool that I have on my blog, which I'll quickly go through here. Basically calculates what your obligation and need would be for critical illness. As a general rule of thumb, a lot of individuals will use their emergency reserve fund as a proxy. This could be 3 to 6 months worth of expenses or income. Some even go as far as 1 year's worth of income or expenses. To get a more precise answer, you could fill in this questionnaire, which is in my blog. It basically analyzes what your current financial obligations are, as well as potential future obligations in terms of medical bills and other financial obligations that may arise if you were to become critically ill. Then factors in what your current financial reserves are, including savings and other assets that you may have accumulated. And then finally determining what your overall need would be based on your current financial situation. I highly urge you to consider filling in this and doing this analysis for yourself. You want to know where you stand, and this would be a good starting point to consider financial or critical illness insurance. Ultimately, it would be best to discuss this with a financial advisor before contemplating obtaining such coverage, just because there's so many options out there and features and benefits, and each one is unique to individuals. When you get the coverage, there are other features and benefits you can add, such as the term, the length of term. So you could choose to have it for 20 years, 15 to age 65 to age 75, or permanent. You can also have something called return of premium, which essentially means that if you never collect and make a claim on such a policy, you can have your premiums paid back after a certain number of years. There's many ways to structure it, so I highly recommend that you talk to an advisor to discuss all the different options and costs of the different options that are available to you. Thank you very much.